All right. So within the levels, as we saw, we have two levels. We have the put support and the put support 0 DTE. Here we can see that basically you can find the 0 DTE options by running our NetJax multi-expiration chart. On the top left, you would see the 0 DTE option for SPY. And here you can see the highlighted by the arrow, the put support level for that expiration. And we're going to talk about the 0 DTEs level in a second. But basically, why are we looking at 0 DTEs? We talked about it yesterday, so we're going to just spend a few minutes today as well. But basically, the difference between the put support and the put support 0 DTE is that the put support level just looks at the full option chain, while the put support 0 DTE only would look at the option chain for that expiration, the one highlighted in the red square right there. And in the case of indices like SPY and QQQ and futures, those would represent the next day expiration. In the case of stocks, the put support 0 DTE would represent the expiration or the weekly expiration as of Friday. So if we look at, for example, the put support 0 DTE for Tesla, that would be looking at the expiration of this Friday for that option chain. All right. So let's go back to why these levels are important, and we talked about it yesterday. But basically, the closer the option is to the expiration and the more sensitive the delta is to small price changes. And that could lead also to the big change in gamma. So we see that short-dated options, typically 0 DTEs or weekly options, they are they have a higher gamma sensitivity. And as the option, again, approaches the expiration, especially the at-the-money options that have typically the highest gamma, they can be very sensitive to every change in underlying price. So the gamma and the delta of the option change really quickly. And as a result, on the other side, the delta hedging activity has to be really adjusted. And that's why we see typically a lot of intraday movement, especially with the 0 DTE levels. With the 0 DTE options, again, because we have less time to expirations, large institutions, traders, and market makers need to continuously rebalance their hedges due to the highly volatile delta of these expiring options. And that can cause really big technical moves in the market. We see an amplification of volatility, especially if, for example, there is a catalyst during the day, maybe like an economic event, and the options that were previously out of the money start becoming in the money. Then we see these large intraday moves, and we see a large activity of hedging, and that's why when we see those large kind of movement as well. And again, we talked about it yesterday. We could also look at potential squeezes. So if those 0 DTE options are monetized or are becoming the money very fast, we could see those gamma squeezes, and we talked about it yesterday, and you could see exponential price moves throughout the day. And then finally, pin risk. So again, we talked about it again during the core resistance session, but it could be that if there is a large enough activity on 0 DTE options, we could see the price really being pinned, meaning that because of this buying and selling pressure, the candle would stick to a level throughout the day, maybe for hours or minutes as well. So that's very important.